Hello everybody, Daniel Research here with yet another video. So today I just wanna go over a few important things that are unfolding as we speak, as well as go back to the NFP data to just show you one component that's very interesting, since I missed it in the video that I did about the NFP report. Okay, so the markets today pretty slow. Okay, pretty non-directional, range bound, but yet interesting. Okay, so if we look at the pre-market, we had some downside momentum, but then it started going up aggressively towards the start of the day. Okay, and if we do a simple trend line like this, you can see that we have some build up liquidity above those highs. And what happened just before the market open? Boom, we smash it. Once the market opens, it goes up and then goes back down. Okay, if we go to the Qs, you can see what happened here. Market opens right here at this level with a gap up, goes up, tries to go up, but it can't really go up. But yet it was up significantly, so people were thinking, okay, it's gonna go up today, right? It has to go up. There's not much data, so there's not that much volume, and it's easy for institutions to manipulate price when there's not a lot of volume. Okay, and so on every up move, it was getting sold into, and sold into. Okay, and right now we're pretty much nowhere, right? Tried to go up, but then smack back down. And we did have a positive catalyst, which was the Oracle earnings. They had a pretty good earnings, and their guidance was okay. The Qs are dumping as we speak. So they had amazing guidance regarding their data center revenue and the outlook for the future, which is pretty good for the stock. The stock was up quite a bit. All right, but as you can see, we're dumping quite a bit right now. So there's selling pressure, and that is that. And a lot of people on Twitter, they're super bullish, like they're saying, oh yeah, we're going to the moon. Sure, right, okay, they were saying the same thing for Bitcoin, since it broke some level, but as you can see, it's also dumping. Right, let's look at something else. Bonds. Right, this is the 10-year yield. It plummeted, really plummeted today, which signals risk. Okay, it signals that there's a significant risks right now, that people are scared, and that's what happens when there's uncertainty, when there's risk, when investors are worried, they're panicking. Not really panicking, but this such a big down candles, this very telling, right? So bonds going down, very interesting, right? So tomorrow we have the CPI, and this is going to be the telling factor of what it's about to happen in the very near term. So we are gonna be on the lookout for that, right? And another interesting thing that I wanted to talk to you about is oil. Oil today down over 4.5%. This is insane. Okay, this is like very bad, and I'm gonna tell you why. Okay, so the price of oil is pretty much determined by two things, as everything is, right? So it's demand and supply, right? And supply, the last big surprise on the supply side that I can remember is Libya. Libya said they're not gonna be producing any oil, right? And of course, this affected the oil price for a day or two. But since then, I don't think there's been such shockers in regards to the supply side. So what does oil going down as much as it is right now signal? Well, what it signals is a recession. Okay, it can signal a recession. I'm not saying that it is right now, but it can be, because when there's a recession, when there's less demand for oil, the price goes down, right? And when people do not spend as much, do not drive as much, do not spend, because oil is in everything. And when you see the price of oil going down, you can be like, sure, like that's great, right? Like the gas in my car is gonna be less expensive. Yeah, but not really, because that can signal recession, right? Price of oil going down can be a sign of a weak consumer demand, right? I mean, just look at this picture. Hedge funds slash bullish oil bets. The net long position in Brent are the lowest in history right now. Okay, so I mean, if that's not telling, I don't know what is. Right? Very very concerning. Okay. All right. Let me just show you something from the NFP report last week that I forgot to show in the last video. Is this? The full-time workers went down, whereas the part-time workers went up. Right? What does that tell you? Well, it tells you that people need part-time jobs to survive, and more people were taking 2, 3 part-time jobs in order for them to pay their bills. Right? Now tell me about CPI decreasing. Right? So this is not a great sign. I can expand more on that since I've been very mindful of this trend here, the part-time workers going up for quite a bit of time. That this is not something that is new in this report, but it's quite telling. Right. All right. So the last thing I want to talk about is Michael Barr's speech today. He's a Fed chair, and he had a speech in which he talked about a change in the Basel III requirements. And I'm not going to go into details about what those changes were or what the Basel III is, but it's essentially like a bank requirements for the capital reserves. Okay, so he referred to the bank failures in the past and addressed the concerns by making a new proposal changing the requirements. He also said that there's going to be a board meeting in order for the Federal Reserve to discuss and decide on the new proposal. He said that the Basel III is not a treaty, and the U.S. can make adjustments to decide the specific concerns in the U.S. economy. Right, but why am I telling you this? Well, because when he did that speech, the bank stocks got slaughtered. Okay, look at this. JP Morgan down over 7%. Look at this. I mean, just look at this. This is insane. Like, it erased 2 months of upward price action in just 1 hour. Citibank down over 3.5% in just a few hours. Look at this. So it's a slaughterhouse out there, okay, in the bank sector. Tech, not that bad. I mean, it's down, but nothing significant. People are waiting for the report tomorrow, okay, the CPI report. And yeah, with the Oracle earnings, pretty good. Database centers, projections, well, it's normal to not have a big sell down day. But of course, it's still early. It's midday in New York, so we're yet to see what's going to happen. But yeah. Oh, I forgot. There was another data point yesterday, which was consumer credit. The estimate was like 11 billion, and it came in at 22 billion. So it was more than double, well, not more than double, but around double the estimate. So consumers taking up more and more credit, and yields are down. Just imagine when yields go back up. Yields are up. I mean, like the real interest rates. Just imagine when the real interest rates go down, right? The Fed cuts the rates. Quite insane, without going into too much detail, as I'm trying to keep those videos as short as possible, right? But it's not great, okay? And I'm not trying to be a doomer here, but I'm just saying what I think, Right? This is my opinion, and nothing here is financial advice. I'm not trying to make you do anything. I'm just saying my way of thinking and what I think about the economy and the market movements here. All right. So, but before the CPI, there's also another catalyst. Is the Trump-Harris debate, the first presidential debate of Trump and Harris, is the day right at market close. So when the market closes, we're gonna have the debate, and the Nasdaq dumping here as we're speaking. All right. So yeah, it's already negative, but yeah. So the debate's gonna be pretty interesting. Make sure to tune in. Pretty sure they're gonna be uh, like streaming it on YouTube, probably on CNN or CNBC, and it's gonna be interesting. It's probably gonna be like a moving event, but not as much as CPI tomorrow. And as for CPI, if CPI comes at expectations, we might see a little bit of a bump. If it comes just a little bit below expectation, we could see an update. However, if it goes up, then expect a sell down. And if it goes down a lot, I would expect an initial bump and then another dump, because an very, very low CPI would mean deflationary pressure, which, without going into too much detail here, is not good for the economy, right? You may say, oh yeah, inflation is going down. Not really, right? Because while it might be good for you in the short term, it's actually pretty bad for the economy. Okay, I'm gonna go into why it is bad for the economy in another video, but oh right, so we're seeing quite a bit of a sell down here. Right, okay. Well, I'm gonna leave you here, guys, to see what's going on here and if there's anything new. Yeah. Next catalyst, Donald Trump, CPI, then PPI the day after. Thank you guys for watching. Subscribe, like the video. See you guys in the next one.